Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Usually, when you think about managing your money, there's this, expectation of control.
Right. You want to be the one steering the ship.
Exactly. It feels a bit like driving a car on a clear day with a manual transmission. You see the road, you shift the gears, you decide exactly when to brake and when to accelerate. You're the one with your hands firmly on the steering wheel. But then you step into the world of decentralized finance and artificial intelligence, and suddenly that clear day turns into this dense fog.
Yeah, very dense fog.
Right, and the steering wheel starts turning on its own. The GPS is routing you based on, geopolitical rumors you haven't even heard yet, and you realize you aren't the driver anymore.
No, you're really just a passenger at that point.
Exactly, you were just a passenger. And that transition from driver to passenger in your own financial life is exactly what we are dissecting today on this deep dive.
And we are pulling from a remarkably dense, highly specific source to do this. It's the March 30th, 2026 broadcast of an audio show called Blockchain DXB.
Yeah, which is fascinating.
It really is. It's like this perfect time capsule of a moment where traditional finance, cutting-edge code, and, frankly, global chaos all just slammed right into each other.
Before we pull the thread on this, though, we need to lay down a really crucial ground rule for how we're approaching the source with you.
Right. Very important.
The broadcast we're diving into, it touches heavily on some intensely polarized political topics. I mean, the host of the source material explicitly references, quote, left-leaning lunatics protesting in the U.S.
Yeah, they get very specific.
They do. They discuss the dynamics of the Biden and Trump administrations, and they go into detail about the debanking of political figures like Donald Trump and Nigel Farage.
So we must be completely unambiguous with you here. We are purely and impartially reporting the contents of this source material.
Exactly.
We're extracting the economic data, the technological leaps and the market sentiment. We are in no way endorsing, validating, or taking sides on any of the political viewpoints or rhetoric presented in that broadcast.
None at all. Our sole job is just to analyze the mechanics of the information. We're strictly panning for the gold of insight and leaving the political river water behind.
Well said.
And honestly, the sheer volume of insight here is staggering. We're looking at massive seismic shifts, everything from the US government creating pathways for you to buy a house using Bitcoin.
Which is wild to think about.
Totally wild. To AI agents that don't just give you financial advice, but are actually handed the keys to trade your money for you.
But to understand why those futuristic technologies are being deployed right now, you first have to understand the environment they're operating in.
Right, the macro picture.
Exactly. According to the source, the current market backdrop is paralyzed by intense global events. The phrase they use repeatedly in the broadcast to describe the crypto market sentiment is extreme fear.
Okay, let's unpack this, because this is where the global stage directly hits your digital wallet.
Yeah, it really does.
The source attributes this state of extreme fear to a geopolitical situation they refer to as Operation Epic Fury, which involves escalating tensions between Iran, the US, and Israel.
Right. But the broadcast makes this really fascinating claim. They state that mainstream media is completely ignoring an impending peace deal that's supposedly only 7 to 10 days away.
Wait, really? A peace deal that soon?
That's what they're saying. And the hosts of the source show names very specific figures allegedly mediating this deal behind the scenes.
Who are they?
They mentioned the Prime Minister of Pakistan, Jared Kushner, and a figure they referred to as D. Vitko. They even urged their listeners to follow Donald Trump on social media for, imminent updates on these negotiations.
Wow. Okay, so regardless of the politics behind those specific negotiations, the economic fallout is what you actually feel in your portfolio.
Oh, absolutely.
The lack of clarity around Operation Epic Fury has just absolutely tanked the market. Our source notes the total global cryptocurrency market cap dropped to $2.37 trillion, with Bitcoin hovering right around 66,669.
And those numbers, they're really just symptoms of a much deeper institutional hesitation.
Yeah, because the broadcast highlights a staggering $281 million in ETF outflows.
Which is huge.
It is. And for anyone who doesn't track market mechanics daily, an ETF or exchange-traded fund is basically a traditional Wall Street wrapper for Bitcoin.
Right. It lets conventional investors buy into crypto without having to, manage digital wallets or seed phrases.
Exactly. So an outflow means those investors are literally hitting the sell button and yanking their cash out of that wrapper, which forces the fund to sell the underlying Bitcoin. The traditional capital is just fleeing the uncertainty.
It's acting like a financial thermometer. It's draining the lifeblood from the system. And, it's not just the Wall Street institutions pulling back.
No,
the broadcast notes that decentralized exchange fees, or DX fees, dropped to $43.18 million.
Yeah.
That is the lowest total fee volume in over 2 years.
Wow. Over 2 years. And a decentralized exchange relies entirely on user trading volume to generate fees, right? Which then pay the people providing the liquidity.
Exactly. When volume drops that low, the incentive structure of the entire platform starts to buckle.
Yeah, the host of the show also pointed out that stablecoin volumes, specifically TrueUSD, were sitting at just over 38 billion.
Right, and a stablecoin is a cryptocurrency pegged to the US dollar, used to quickly move money in and out of volatile assets like Bitcoin.
And the hosts argued that volume should be 5 times that amount for a healthy, functioning market. The grease in the gears has essentially dried up.
It's a complete liquidity freeze.
I have to push back on this fundamental premise, though.
Okay, go for it.
If the underlying mathematics of blockchain technology haven't changed, if a Bitcoin block is still produced every 10 minutes and the cryptography is completely secure, why is the crypto market acting like a startled flock of birds at the first sign of geopolitical rumors?
That's a great question.
Shouldn't a decentralized, borderless asset be completely insulated from a regional conflict?
In theory, yes, absolutely. But in practice, humans are still the ones pushing the buttons.
Ah, right. We're the weak link.
Exactly. What the source is illustrating is the gap between the brilliance of the code and the psychology of the investor. During a global crisis, an institutional fund manager does not care about the revolutionary nature of a decentralized ledger.
They just want to protect their assets.
They care about liquidity. They want cash, not code. If they think a conflict is about to escalate and disrupt global supply chains or energy markets, they pull their most volatile exposure first.
So until there's a definitive update about Operation Epic Fury, the market just holds its breath.
Exactly.
Well, if human panic is what breaks the crypto market, it actually explains our next topic perfectly. Because while global events are causing international investors to pull their money out in a panic, domestic U.S. institutions are quietly building infrastructure to weave cryptocurrency deeply into everyday life.
What's fascinating here is the ideological contradiction.
It really is.
You have an asset class that was literally born out of a desire to completely bypass the traditional banking structure. And yet, one of the biggest milestones discussed in the broadcast is the U.S. government allowing crypto to be integrated into the most traditional foundational financial instrument in existence.
The 30-year mortgage.
The 30-year mortgage. The broadcast details how the U.S. government is making room for Bitcoin and USDC to be used as collateral for down payments on Fannie Mae-linked home loans.
And this isn't some fringe experimental private lender. Fannie Mae is a government-backed mortgage system.
Right. And the mechanics of how this works are vital to understand.
Yeah.
You are not handing over Bitcoin to the person selling the house. You are locking it up.
Okay, so let's say you want to buy a house and you have like $500,000 sitting in crypto. You pledge that crypto into a secure system. The system gives you partial value for it, granting you a standard mortgage alongside a loan backed by your digital assets. Your Bitcoin or USDC gets locked up securely until the loan is fully paid off.
Here is the crucial mechanical detail the source highlights, though. There are no margin calls if the price of your crypto falls.
Wait, none at all?
None. In a normal financial loan backed by a volatile asset, if the value of your collateral drops below a certain threshold, the lender issues a margin call. They demand you instantly deposit more cash, or they seize and sell your asset.
So if your $500,000 in Bitcoin suddenly drops to $200,000 because the market panicked over, say, geopolitical news, the bank does not suddenly demand you make up that $300,000 difference.
Correct. You don't lose your house just because Bitcoin had a bad week.
That absence of a margin call is massive.
It is, but there is a very strict catch. You still have to make your standard monthly mortgage payments in fiat currency, regular US dollars.
Oh, of course.
You cannot access that locked-up crypto to help you make those monthly payments, even if its value suddenly skyrockets to $1 million.
Yeah.
It is completely untouchable.
This is where I start seeing massive red flags for you listening right now. I mean, using a wildly volatile asset like Bitcoin to secure the most stable asset you will ever own your home feels inherently dangerous.
It's definitely a risk.
It's like trying to anchor a cruise ship with a rubber band. It feels completely solid right up until the temperature changes. What happens if you lose your job and miss a standard dollar payment?
Then you're in trouble.
Your crypto is locked, your cash flow is gone, and your house is on the line.
It is a highly leveraged, risky scenario, and the source notes that experts are loudly warning about those exact dangers. But from a macro perspective, it signals a massive shift in regulatory acceptance.
Right. The government is treating crypto as legitimate property.
Exactly. And that ties directly into the other major government action discussed in the episode.
The Federal Trade Commission.
Yes. The source covers FTC Chairman Andrew Ferguson issuing formal warning letters to the CEOs of the major financial arteries, PayPal, Stripe, Visa, and Mastercard.
And the FTC letters were specifically targeting the practice of debanking, right?
Yes, debanking. Right. Which is the act of a financial institution denying payment processing or banking services to individuals or businesses based entirely on their political or religious beliefs.
And the broadcast frames this FTC action very specifically. They link it directly to the past bank account closures of former President Donald Trump under the Biden administration.
Right. As well as the debanking of British politician Nigel Farage by his opposition.
The host of our source explicitly calls this FTC warning a win for the crypto industry, framing it as the U.S. government finally pushing back against centralized financial censorship.
And it connects perfectly to the core ethos of cryptocurrency. The foundational argument for Bitcoin was that centralized financial systems shouldn't possess a kill switch to turn off your ability to transact just because they disagree with your politics.
Right. Nobody should be able to just freeze you out of the economy.
Exactly. The FTC warning traditional payment processors about this behavior essentially validates the primary argument for why decentralized finance needs to exist in the first place.
So the government is building bridges, They're acknowledging crypto's utility in mortgages and validating its anti-censorship ethos. But while the government moves at the speed of, bureaucratic paperwork, the technology itself is sprinting in a completely different direction.
Oh, absolutely sprinting.
We're seeing a shift where developers are trying to remove the human element and all the panic that comes with it entirely.
The technology is evolving from a passive asset that you hold into an active agent that thinks and works on your behalf.
Here's where it gets really interesting. The broadcast highlights a new product from Trust Wallet, which is a Trust Wallet Agent Kit, or TWAC.
Yeah, and we are moving way past the era of a chatbot just telling you what the price of Ethereum is.
Right.
TWAC is an artificial intelligence agent that can execute actual, real crypto transactions based on parameters set by the user.
The mechanics of this are wild. We're talking about cross-chain swaps and limit orders across more than 25 different blockchains, including Ethereum, Solana, and Bitcoin. That's an insane level of interoperability.
It really is. Doing a cross-chain swap manually, like moving value from the Ethereum ecosystem to the Solana ecosystem without using a centralized exchange as a middleman, is incredibly complex for a human.
Yeah, it involves bridges, multiple wallets, and extreme security risks.
But with TWAC, you essentially hand the AI a set of smart contract keys with strict rules.
Yeah.
You tell the AI, if this token drops to this price, execute this mathematical function to buy it and move it here.
And the AI simply reads the state of the blockchain and fires the trigger at the exact millisecond the conditions are met.
It's the financial equivalent of a self-driving car.
Yeah.
You input the destination and the speed limit, and the AI handles the complex, real-time mechanics of navigating the chaotic traffic of the blockchains to get you there safely.
But I keep thinking about a point raised during the Ask Me Anything segment at the end of the Source broadcast.
Oh, yeah. Shirley's question.
Right. A listener named Shirley has a very blunt question. Will people actually trust this? Which is a totally fair question. We all know AI can hallucinate. It makes logical errors.
Exactly.
If a hacker manipulates the parameters, or the AI misinterprets a spike in market data, couldn't this self-driving wallet enthusiastically drive your entire life savings right off a cliff?
The host of the Source broadcast validates that exact fear. The risk of malicious manipulation in automated financial transactions is astronomically high.
Because if a bad actor feeds the AI false pricing data, the AI might execute a terrible trade perfectly according to its programming.
Right, it doesn't know it's a bad trade, it just follows the rule. But developers are pushing forward anyway because this represents a fundamental paradigm shift. We are moving from AI advising us on what to do to AI executing the action for us.
Taking the human out of the loop entirely to gain speed.
And to understand the broader momentum behind this, we really have to look at the other AI implementations the Source covers, which occurred over in the United Arab Emirates.
Yeah, this part blew my mind.
The drive for automated execution isn't just happening in digital wallets, it's happening in physical cities.
The broadcast details two fascinating physical AI deployments in the Middle East. First, the Prop AI Deal Index in Dubai.
Right. It is an AI platform providing real-time, data-driven insights into Dubai's incredibly fast-paced real estate market.
It tracks transaction volumes, price fluctuations, supply and demand, and overall market sentiment in real time.
And the stated goal is to spot off-market real estate opportunities early during periods of uncertainty. It removes the guesswork, the human bias, and the emotion from buying property. It relies strictly on the data.
And then you have Abu Dhabi, which expanded its smart municipal fleet to 27 AI-powered vehicles.
These are physical cars driving around the city.
Yeah, equipped with advanced cameras and detection systems, analyzing public spaces for infrastructure issues without a single human inspector in the vehicle.
The results of removing that human element are staggering. The source notes that by automating these city inspections, the number of visual distortion cases, essentially public maintenance issues, detected by the city skyrocketed.
From what to what?
From 3,632 in one year to 18,851 the next.
Wow, that is a 5-fold increase in detection just by taking the human eyeball out of the equation.
Exactly. Whether it is Abu Dhabi's smart fleet scanning the physical streets for potholes, Dubai's Prop AI scanning the real estate market for undervalued homes, or Trust Wallet's TWAC scanning the blockchain for arbitrage opportunities. The underlying mechanism is identical.
AI removes the human bottleneck.
Yes, it drastically increases efficiency, coverage, and speed, but it requires an immense, almost terrifying level of trust in the underlying parameters of the code.
Because if the AI makes a mistake at that speed, the damage is done, the trade is executed, or the fine is issued before a human even realizes an error occurred. It's thrilling, but perilous.
Very perilous.
If AI is going to perfectly manage our crypto portfolios, find our real estate deals, and inspect our cities, how are human beings supposed to plan for the future?
According to the final major piece of data in our source, we don't plan, we bet on it.
The source drops a massive piece of institutional financial news. The Intercontinental Exchange, or ICE, which is the massive traditional finance entity that owns the New York Stock Exchange, announced a $600 million investment into a platform called Polymarket.
And that $600 million is on top of a previous $1 billion investment they made back in 2025.
So we are talking about nearly $2 billion from the heart of traditional Wall Street pouring into a single crypto platform.
Which is just staggering. And for those unfamiliar with the mechanics, Polymarket is a decentralized prediction market.
Right.
Users place bets on the outcome of future events. It could be who wins an election, whether the Federal Reserve will cut interest rates, or even the outcome of geopolitical conflicts.
But the mechanical catch is that you cannot use regular fiat currency, right? You can only place bets using cryptocurrency, specifically stablecoin.
Exactly. And if we connect this to the bigger picture, you have to ask a fundamental question. Why is the company that owns the New York Stock Exchange pouring billions of dollars into a crypto-only betting platform?
Because Polymarket isn't just a casino, it's a financial lie detector test.
That is exactly what it is. Prediction markets operate on the principle of the wisdom of the crowd, but with actual financial skin in the game.
Which changes everything.
It does. When people are forced to put their own money on the line, their political biases, their wishful thinking, and their grandstanding just vanish. They start aggregating real, hard data.
Because of that financial consequence, prediction markets often synthesize chaotic, fragmented information much faster and far more accurately than traditional polling or expert analysis.
Right. Going all the way back to the beginning of our deep dive, the extreme fear over Operation Epic Fury.
Yeah.
Traditional media might be completely ignoring the rumored peace negotiations. Traditional Wall Street markets might just panic and sell off their ETFs. But a prediction market.
A prediction market forces thousands of financially motivated individuals to aggregate every tiny rumor, every tracked flight path of a diplomat, every whispered negotiation by the Prime Minister of Pakistan, and price it instantly into a mathematical probability.
ICE is not investing in gambling. They are investing in what might be the most powerful, real-time information engine on the planet. They want to own the data that predicts the future before it happens.
It is an incredible way to synthesize the chaos, and honestly, it ties the entire narrative of this source broadcast together perfectly. Think about the massive arc we've covered today.
It really shows a complete transformation of how value moves and how decisions are made.
We started with human emotion, global geopolitical fears actively tanking the crypto market, causing hundreds of millions in ETF outflows because humans panic. Then we watched the US government legitimize that volatile asset by allowing it to secure 30-year mortgages, while the FTC defends the industry's anti-censorship ethos against debanking.
From there, we saw the technology adapt to human panic by removing the human entirely.
Yeah.
We saw passive wallets transition into active AI financial agents trading on our behalf, mirroring the AI fleets taking over city management and real estate in the UAE.
And we ended with the apex of traditional finance, dropping billions of dollars to harvest the predictive data generated by crypto users financially betting on the future. So what does this all mean for you listening right now?
It means the architecture of your daily life, your investments, and your privacy is being rewritten in real time by code that doesn't sleep and doesn't panic.
Yeah.
And it leaves you with a lingering, slightly unsettling thought to mull over. We are rushing toward a future where AI agents flawlessly execute all of our trades, perfectly assess our real estate values, and flawlessly predict market shifts using identical, highly rational logic.
Right. They're all looking at the same data.
But every financial market in history requires a buyer and a seller. It requires a winner and a loser. If every single person is eventually using a perfect AI to make their financial decisions, who is left to take the losing side of the trade?
Wow.
Does the market just freeze when human error is finally eliminated entirely?
That is terrifying. At what point do we realize that building the perfect self-driving financial car might actually mean there's nowhere left to drive? Thank you so much for joining us on this deep dive. Keep your hands ready to grab the wheel if you need to, and we will catch you next time.